Well, good afternoon, traders. And if we look across the price spectrum straight away, I think it's probably oil that really jumps out. And you've got prices on WTI contract 57.79. So a little bit of buying coming through there. That's obviously a reflection of what we're seeing, this geopolitical tensions that are brewing between the US and Iran, the idea that we're going to see additional sanctions playing through. Now, the oil price really can't be discounted just how influential that's being at the moment. There's no doubt that we're seeing inflation expectations moving a little bit higher on the back of this, both in Europe and both in the US. And that is something that won't have gone unnoticed by the ECB and the Federal Reserve as well. So we're watching oil. Our volumes haven't really picked up dramatically. I think, people have been focused on what's happening in the gold price. Gold's still holding around 14.01 at the moment, if you can see from the price table. So very flat on the session. The question we've been asking, of course, is whether or not this move is a little bit too frothy. Whether there's a bit too much love in the gold price, but certainly the technical break that we've seen in gold, a lot of people are focused on this 6-year trend break that we've been seeing, this consolidation zone. The breakout level there, 1360. A lot of people are looking for that retest, hoping to find that that's now confirmed as support, before we make a move up longer term to sort of 1530, which is December 2011 lows. That's a lot of water to flow into that murky bridge before we get to that situation. Of course, the other big talking point on the floors at the moment is what's happening with the US dollar. As we can see from the currency markets at the moment, fairly limited moves. We've seen Aussie dollar making a bit of a move up. That's probably been the big play today. 69.57, up 31 points on the session. We did have Philip Lowe, the RBA governor, coming out in the early part of the session, suggesting that there was sort of limits to what could be done with monetary policy, leveraged accounts, closing out some of those shorts that we've seen on the Aussie, and that's really pushed it above the 20-day moving average. If you look at the 20-day moving average, it's moving perfectly sideways. There is scope now to push up to the top Bollinger Band of 70 cents. I think that's a pretty big stretch, given that's about sort of 50 points higher than where we are at the moment. And I think, that's probably where the level that you'd look to fade into the top Bolly, just on the idea of mean reversion playing through. But dollar Swiss has been heavily sold recently. It's really flat on the open of the market. Dollar yen, again, another flat trade, but those pairs very much been in heavy selling of late. In the equity markets, if you have a look there, you can see the Wall Street cash up 33 points, 26,752, pushing the all-time highs there, as is the case in the S&P. If you have a look at the S&P, 29.52 up 2 points. Again, just a very flat afternoon there in terms of those markets. Haven't seen a huge amount of business playing through in those markets today. It's obviously a sign of what's happening in S&P futures, but it does look like we're going to go on to see a new test of those all-time highs that set on the 1st of May. It wouldn't be a surprise, given what's priced into the rates market, to see a test of that short term. The German DAX called down 50 points, 54 points. That looks a little bit weak to me. I think you'll probably see a little bit of buying coming through as we approach that European Open, but certainly Asian markets not really giving those opening calls too much to work with at this stage. What I am also looking at is the event risk for tonight. We are looking at these regional numbers, the manufacturing numbers coming out of Chicago and also Dallas, and also how that plays into next week's ISM manufacturing. So, of course, the dollar in play there. The question, of course, is, going to the end of July FOMC is, do we get a 50 basis point cut or do we get a 25 basis point cut?